Active investments are actively managed on your behalf. The manager works toward a specific mandate with the objective of performing better than a chosen investment benchmark. Through various investment strategies, managers are able to increase your investment's performance. This approach, along with the benefit of possible benchmark outperformance, results in the fees for managers being understandably higher than in a passive investment approach. On the other hand, passive investments do not have individuals managing the selection of stocks. Instead, investments are made into funds that track specific indices with the objective of replicating that index's performance. Since passive investments don't select stocks or predict performance over time, the market investment fees are lower and there are no consequences for incorrect predictions. There may appear to be very little to differentiate one passive investment from another. The indices are standardized, management fees are lower, and a degree of deviation from the benchmark is expected through anticipated tracking error. However, at Liberty Corporate, we know how to provide passive investments with zero tracking error on the Liberty Single Asset Class Tracker Funds and offer the lowest management fees in the market. Our Liberty Single Asset Class Tracker Funds and the Liberty Balanced Tracker range offer a complete suite of risk profiles to suit all your investment needs and provides access to all major asset classes and the comprehensive set of risk profiles. The Liberty Single Asset Class Tracker Funds are ideal for investors who are looking for broad market exposure. What can an investor do with a Liberty Single Asset Class? Investors can construct a balanced strategy by blending the allocation to the various single asset class tracker funds and use the trackers as part of a core satellite investment strategy to optimize the portfolio offering or to reduce overall portfolio fees. Liberty utilizes the group's wide range of capabilities and the strength of its balance sheet to offer investors cost-effective access to equities, bonds, and money markets with a zero tracking error. Investors have a choice of 4 fund options through the Liberty Asset Class Tracker Funds. The Liberty Balanced Tracker range is ideal for investors looking to have access to local and offshore asset classes. In this way, investors are able to access the local equity market through 3 Liberty Balanced Tracker Funds, namely the Liberty Conservative Balanced Tracker Fund, the Liberty Moderate Balanced Tracker Fund, and the Liberty Aggressive Balanced Tracker Fund. The Liberty Balanced Tracker range has a choice of 3 fund options offering a complete suite of risk profile solutions. Liberty's Conservative Balanced Tracker Fund focuses on capital preservation with a target return of CPI plus 3% over a rolling 3-year period. Liberty's Moderate Balanced Tracker Fund focuses on minimizing return volatility while achieving inflation-beating growth with a target return of CPI plus 4% over a rolling 5-year period. Liberty's Aggressive Balanced Tracker Fund targets high inflation-beating growth with a target return of CPI plus 5% over a rolling 7-year period. What's more, Liberty's exceptionally low fees offer the most cost-effective investment solution on the market with a zero tracking error on the single asset class tracker funds. So whether you're looking for reliable returns, risk mitigation, or fee reduction, our passive investment range are an invaluable component of your retirement fund.